Hi, I'm Hannah Bernard. You're watching Market 1 Minute, and today I'm joined with Marin Katusa of Katusa Research. Now, Marin, you've followed the global energy sector for a long time, so you're probably the right person to ask and get a bit more insight on where we're at with oil. What are you telling investors right now?
Be very careful. It's a demand issue, not a supply issue. And with the big producers having such devaluation in their currencies, they can keep producing at a cheaper cost than the Americans can. So this is a foreign exchange issue. So, with the Iranians coming back online here, expect about 1 million barrels in the next 18 months. There's no shortage of oil. I'm telling people to be very cautious. It's what I've said since mid-2014, and the trend is your friend. I still think that there's a lot of problems out there, so I don't see oil rebounding to $50 anytime soon.
Now, I also read that you wrote $200,000 today can get you what it could have gotten you $2 million worth.
Just a few years ago.
Just a few years ago. Let's talk
Even
about
more.
That.
And the key is to focus on world-class tier 1 projects that the majors are going to have to buy out when the market does turn around. And the commodity markets are very cyclical. They will come back. Even with the little growth that China is going to have, the world's not coming to an end. And the reality is you get a tier 1 project, you're going to do very well, and you're buying de-risked, proven assets, and you're buying them at a nickel on the dollar. That's where you want to focus.
Now, you talk about the cycle. Right now, are you seeing any positive indicators?
For me, the positive indicators are positioning yourselves at a huge discount. To be successful in the resource sector, you have to be a contrarian. And a lot of people don't understand that your risk is directly correlated to the price you pay. So there's many projects out there like the Pebble project, at $22 per share, or say a project value of over $4 billion, you had all the major funds in the world, the big producers like Anglo and Rio Tinto as shareholders. People thought that it was less risky, but now that it's at 40 cents and it's a much better project today than it was just 6-7 years ago, you can buy it for less than 10 cents on the dollar. You can actually buy it less than 5 cents on the dollar. That to me is wise speculation.
I want to talk about another resource that you've spoken about in the energy sector, uranium. We talked to a number of companies that are mining in the Athabasca Basin in Saskatchewan. Talk about the market that there is for uranium right now.
Well, look, the Athabasca Basin is the highest grades in the world. It's in Canada, so the politics don't get better. The land title doesn't get better. And you also have the weaker dollar. Just like the oil producers in Canada benefit from a weaker dollar, so do the uranium producers. So from Cameco, the big boys, to some of the more proven deposits and the exploration companies, I think that the most recent investment of the Chinese into fission shows that there's a world interest into the Athabasca Basin. That will continue because the reality is the Russians and Chinese have expanded their reach globally into Africa, Mongolia, Kazakhstan. So there's, where else can a North American company succeed? I like to focus in the Americas. So if you're in Paraguay, if you're in the US, in Athabasca Basin, those are probably some great places to start.
Now, lastly, before I let you go, I'm sure all investors want to know, for someone with your expertise, where are you putting your money right now?
Well, our funds are a little over 50% cash. And like I said, world-class tier 1 projects that are de-risked, and I can't emphasize enough, I'm not really looking at buying exploration high risk when I can buy proven world-class assets on a discount. That's where I'm putting my dollars today, and backing world-class management teams.
So you're not really focusing on one resource, you're just looking for top tier?
Top tier. I stay away from coal. Coal's dead, iron ore's dead, thermal coal, I can't stress. I've been saying for years, stay away from thermal coal. There's certain commodities I won't touch. I also don't like the niche markets, but uranium, green energy, gold, copper, I'm pretty excited about the next 5 years.
As always, great information. Thanks so much for being with us, Marin.
Thank you.